Hello, everyone. Welcome, welcome, welcome. You know the drill. We're going to wait a couple minutes for some participants to stroll in. So glad to see you. Hold tight. As you're coming in, if you want to drop a note in the chat where you're calling in from, it'd be really fun to see you all. Thank you for joining. We're going to start in another minute or two. See my friends in Phoenix are the first to the chat. Good to see you, Melissa, and everyone. Oh, thanks, everyone. Now I can't keep up. It's all coming in so fast. Thank you. I'm so glad you're here. Seeing all my friends. Anytime I see kind of the sea of names, I'm in my 20th year of consulting, and I'm reminded how many people I've had the privilege of meeting. People committed to this whole ecosystem of generosity, from fundraisers to philanthropists and nonprofit leaders to community members and volunteers. I'm so glad you're here. Thanks for calling in. We're still strolling, a few more strolling in. I think Zoom is starting to catch up with y'all. Oh, so many great familiar names. I think I'm going to start opening up my slides to share screen here. All right. Well, thank you, everyone. Thank you, everyone, for being here. I think I'm going to go ahead and get started because you all here want to hear the Giving USA data, and I'm going to hopefully make it interesting and talk to you a little bit about it. Welcome. I'm Josh Birkholz. I'm currently CEO of BWF, and for a few more weeks, I'm the chair of the board of the Giving USA Foundation. It's been such a privilege to be a steward of this research that's continued since the 1950s. I was there when the Giving USA book was put into the Smithsonian, the longest running history of philanthropy, really of anything of its kind. And I'm really excited to talk about the results because in many ways it's a measure of the work that we're all a part of, the work of giving, the impact of the fundraising work that we've done, knowing certainly that generosity is so much bigger than just giving to charity. But it's a measure to remind us that even in times of inflation, of economic uncertainty, when the markets are maybe going well, but we're not sure they're going to stick around that way, that we still decide to give. We still decide to take care of people around us, to solve the big problems, to commit to the arts, to educate our youth and to save this environment. Pleasure to talk to you about the work that I've committed myself to, and I know so many of you have as well. So I'm going to talk about what the heck happened in 2023. So this data is official as of today, and there's been a lot of news and different webinars, and I value so much that you're here with us in the BWF community for this one. And a special welcome to the Minnesota live audience, who I'll be coming downstairs to go see. I'm in a different floor of the same building for some live Q&A with all of you. As we go through this, if there's questions, feel free to put them in the Q&A. If I'm able to get to them, I will. Otherwise, I will follow up after the fact as well as I can. So thank you again. So I'm going to just talk about what it is first. What is Giving USA? Because maybe for some of you, this is your first exposure. Many of you have probably been very familiar with it. So it is the longest running annual report on U.S. charitable giving. Back in the 1950s, there was the American Association of Fundraising Council. That was a professional association, which is now called the Giving Institute. It's the association of all the companies, originally consulting firms, but also now technology companies, executive search, screening, data, different types of product companies that are committed to serving the philanthropic sector. This association, our charitable arm, is called the Giving USA Foundation, where we produce and sponsor research. This being our signature report, the actual Giving USA annual report. But despite our name, we also do global research and spotlights on topics of philanthropy, even beyond giving in the United States. And the work is funded partly by subscriptions, but also by generous contributions from these firms that many of you know and love, including BWF. We're proud supporters of Giving USA. Now we again produce this, but sort of like in a show, the producers aren't the ones directing and on stage. Indiana University, the Lilly Family School of Philanthropy, do the research and writing that we sponsor and collaborate with so closely. They're wonderful research partners. We learn from them. We're part of this group, even from a methodology committee, an external review panel, to the editorial review board that really puts the practitioner voice in the chapters. While we're going to talk about data today, the book itself that comes out later in July is just chock full of wonderful qualitative stories, really the almanac of what the trends are in the United States. So these are some of the key supporters. I just want a special thanks to the Platinum supporters, CCS Fundraising, Donor Search, and the Biederman Group for really stepping up and showing their generosity. But look at this list of organizations. Very proud to be numbered among them in supporting Giving USA. Now, as a board chair, I must also invite you, if you have not subscribed to Giving USA, you really should. Subscribing is not just access to this data and the Giving USA book we all know and love. We're producing regular special reports. We had one on giving by generations recently, on donor advised funds, planned giving, corporate giving. We've got new research coming out. We've got an active research committee looking at what are the important topics to be told. You have access to all those special reports, as well as historic data and historic library of archived digital products, special pricing for print copies, and so forth. So givingusa.org, it should be pretty straightforward and easy to subscribe. I definitely encourage you to consider that. All right, let's jump into it, because this is super fun stuff. And I go on and on because I get so excited. I'm going to try. I've got my wonderful friend Sarah Cadiz, who's going to help me if I miss something in the Q&A to bring my attention to it. And I know there's an immediate question about it being recorded, and yes, it is being recorded. I believe it will be available to the audience after the fact. So, yes, it is being recorded. Thank you for that question. And so what I want to do is I want to start with the global context, because, so again, this report is on giving in 2023. So we finalized those numbers now in June for 2023. But there's a lot of things changing in 22 going into 2023. Many of us noticed the stock market decline towards the end, which some people say tanked the numbers at the end of 22. But we saw that, and we saw a lot of changes, but also there were some changes in the global context. So in 2023, global philanthropic sentiment was actually quite high, even though the US posted a decline, and it had only declined giving 4 times in as many decades that US giving has gone down. It has gone up, at least in current dollars, every other time. But we did see overall, since US pulled the numbers down, it masked that some areas were climbing. Sweden, for example, the sharp line up, had a record year in 2022, as well as the UK had been going up. We had seen some growth in across the country or across the globe, even though US went down. And many economists expect 2023. We're like, this is going to be a great year globally for philanthropy. That's what people are saying, based on indicators such as security markets and inflation moderation. But the story globally, as well as the US, is that the affluent individuals and the grant maker segments were growing, but the everyday donor segment was declining. Now, this is hardly a new story. The overall donor base was declining while giving amounts increased. A contributing factor on the global discussion was that there's been a declining trust in NGOs, in nonprofit, non-governmental organizations. And this has been most notable in Western traditions. But we've actually seen stronger levels of trust in Asia and Africa. In fact, 1, 2, and 3 were China, Kenya, and India for the levels of trust in philanthropy and nonprofits. Some of the US and then the UK, which have had higher philanthropic numbers, the trust has been on a declining scale. It's something that people are paying attention to. And that was really the Edelman Trust Barometer. I'll talk about that a little bit more later when I dig into the US numbers. And one thing too is the high net worth has generally been ahead of the everyday donor in some areas such as education and arts and culture. But even in human services and religion, which have been more typically a broad-based support, have also seen high net worth individuals on the global scale surpass the everyday donors. Along with that, we've seen growth in institutional giving, giving through foundations, or in structured philanthropy, like giving through donor advised funds or different gift instruments, which are more common to the affluent. So growth in foundations and DAFs aligned to the proportion and income levels and gift levels of the distribution of the overall global constituency. And during the pandemic, we saw giving preferences turn really local. And we remember this, helping our local food shelves, the local hospitals, giving to the local park, since that was an opportunity to go outside, more so than broader environmental initiatives or medical research and so forth. We saw a turn inside local, but we started to see really with Ukraine and then also Israel, Gaza, that the trend reversing and demonstrating a resurgence in international giving and giving broadly. So from a local, it's shifted out broader and more similar to distribution that we saw pre-pandemic in terms of local versus global focus. Okay, so that was setting us up for 2023. The stock market was going down, good global sentiment, trust stronger in non-Western, traditional European and North American, stronger in Asia and Africa, and then the everyday donors declining while the affluent increasing. Now, in 2023 in the US, charitable giving, actually, it went up in current dollars. We reported in 2023 that the US population of individuals and organizations gave $557.16 billion. Now, last year, if you recall, we announced that it was 499 billion. Now, one thing I should explain with the Giving USA data is we get a lot of our data from the IRS as well as some other sources, and the IRS continues to roll out revisions to their data. So we make sure that every time we release a Giving USA report, all of the numbers, even looking back, are updated with those revisions. But added to that, there's been a tremendous amount of inflation. And obviously, you're all aware of that. If you ever tried to buy a loaf of bread or eggs or fill up the gas tank, the things have cost more than they used to. And that also affected the numbers, with 2021 in inflation adjusted dollars has really climbed even more so. It has been the record year, and thus, because of the inflation adjustment, it's even higher. In 2021, we had hit $621 billion in inflation adjusted terms. So if we look at the trend from an inflation perspective, giving actually went down this year a couple percent, even though it went up in the actual dollars given from 546 billion, which is the revised current dollar number 22, to 557 billion in 2023. Now, 2020 being the pandemic year, highlighted in red, where there's actually a recession year. Most of the giving in the US, we've gone up in recession years more than we've gone down. Obviously, the 2008, 2009 is where we had the 2 consecutive years of decrease, and we've only had 2 other years in the last 40 years where it has gone down in current as well as inflation adjusted dollars. 2020 and 2021 saw really a resurgence of giving, 2021 being peak of giving and best year of record in the United States. Now, many things have contributed. We've had a lot of unusual circumstances. Many point back to some changes in tax legislation in 2017. As you recall, that was the Tax Cuts and Jobs Act, which a lot of people are evaluating as that comes to its expiration date. Now, there's been a lot of discussion. Did that help? Did it hurt philanthropy? And there's really a lot of analysis on both sides where it might have lifted some of the asset wealth that contributed to higher total dollars. But in the areas of the itemizers, especially at the mid-level giving, it might have adversely affected. We've seen reports as much as 13% in those first few years in terms of mid-level donors, which have been climbing back. Of course, during this time period, we had some big issues: COVID-19 pandemic, natural disasters, humanitarian crises, economic factors, including the recession and above average rates of inflation for 3 consecutive years, really the collective 20% and 4, changing norms. very large gifts used to be all press releases, and now there's a little bit less transparency around those. So for us to collect, really understand the outlier gifts, is a little bit trickier. But we made a point of capturing those gifts which would affect the total in the econometric models. And there's really continues to be mega gift happening. The 5 biggest donors this last year were Michael Bloomberg, who's often on that list. Mackenzie Scott, who has really been a positive disruptor for the sector, Phil and Penny Knight, Michael and Susan Dell, and Warren Buffett. Collectively, those 5 households gave $8 billion, which is more than 5% of all individual giving in the United States. So 5 households gave more than 5% of all giving by individuals in the United States. And all but one of them gave 2 charitable foundations, of which that money will then go to charitable sector later. The exception being Mackenzie Scott, who gifted directly to charitable organizations. So charitable giving, a lot has changed, it's impacted, and the growth in giving in 2023 may indicate positive signs for philanthropy moving forward. A lot of the economic markers are aligned with where we see growth in giving. Now, one of the changes a lot of people have noticed is the share of individuals is shrinking compared to the growth of foundations. What I have on the slides here is 1983 versus 2023. It's a nice 40-year view. This is data from the Lilly Family School of Philanthropy at Indiana University. And you'll notice those gifts from individuals being 82% in 1982. If you might consider bequests being individual gifts, certainly after someone has met certain realities at the end of life, those are realized. That would move us to 88%. And some portion of those foundations then would have been family foundations. Let's say that's 2 to 3%, that's an estimate. Roughly 90% of giving in 1983 were decisions made by individuals, even if some went through foundations or through bequests. Corporations being more purely organizational giving. Although certainly there are private company holders that give through their foundation or through their company. For the most part, those are true corporate gifts. Now, in 2023, even though that individual number is down to 67%, we add that bequest in, we're at 75%. And then the portion of the foundations, by some estimates, generally people are landing at around 84% of giving decisions are still made by individuals compared to 90%, even though those individuals are increasingly giving through structured means like through foundations and through other mechanisms. So in some ways, this might reflect the growing affluence and the role of affluence in dictating the trend line in philanthropy, because wealthier donors are the ones more likely to structure, to give through foundations, to set up donor advised funds, and so forth. So indeed, the individual portion has decreased, the foundation portion has grown, but the influence of the individual in the charitable decision is still probably around 84%. Now, giving is linked to many economic factors. The one everyone always asks about is GDP. Since we've been tracking for a very long time, and I'm going to back about 40 years, 1983 here again, and we've roughly hovered around that 2% mark. In fact, it was right at 2% in 2023. The charitable giving in the United States tends to be around 2% of our GDP. GDP increased by 6.3% this year, but it also increased by about that much the year before when giving went down. So while it does tend to be a pretty close approximation, about 2% of GDP is a good approximation of what charitable giving would be, it's not necessarily a leading or driving indicator. And part of that is because GDP is more related to production, where the asset markets are more related to giving by affluent individuals who are more likely to give from appreciated assets. Also, foundations are related to asset markets. Additionally, during this time period, we started to see, even though it was high inflation rate, towards the later part of 2023, the second half, we started to see some moderation and leveling. So we had those peaks in 22 where it hit 9.1% in summer of 22. We've started to see a flattening. It's gone back down. Now, certainly people perceive inflation from a cumulative perspective. The price didn't go down by 5 points. It just only went up 4 more points. So if you think about it that way, or 4 more percentage points, there's still a feeling that things cost more. They cost 20% more than they did 4 or 5 years ago, and we noticed that. But we also noticed that unemployment had been holding steady. Our own clients were reporting that their numbers were up in 2023 for the most part. Based on our informal poll, we would have predicted giving to have gone up. But some of the early reports from other outlets, Fundraising Effectiveness Project is one well-known one that we have a strong relationship with, because really they captured the everyday donor and the everyday charity in a very comprehensive way. And we don't really capture the donor count, so we really work with them on that. Some of their reports were showing a down year skewed a bit. We think it was skewed a little bit towards small organizations, meaning even if your sector went up, maybe some of the smaller charities within that sector weren't going up or even going down, where the larger groups were pulling up, sort of a haves and have-nots with the charities, just like with the donor population. So there was a little bit of mixed indicator, but predominantly positive trends. So now when I talked about GDP versus the asset market, what you can see here is the S&P 500 tracked along with the giving numbers. Now, even though when the S&P would go down, giving would trend down a little bit, but it actually held its own. We find consistently that philanthropy is more resistant and resilient to economic shocks. They do pull and push on it, and we're tracking closer and closer with market trends. However, when it drops down, it doesn't drop down as much. So it's a little bit smoother against it, but it correlates more closely with S&P 500 really than it does to the gross domestic product. Now, when we look at the sources of giving, so this is where the giving came from, individuals, bequests, foundations, and corporations, they all went up, but inflation sort of made it tell a different story. When we look at 2-year trends, corporations and foundations had positive 2-year growth, even when adjusting for inflation. We didn't see the same with individuals and bequests. Bequests, though, to be fair, is perhaps the most volatile of the segments, and it's not necessarily reflecting decisions that were made in that year. It's really when people's bequests were realized. So it doesn't reflect who made bequest commitments this year, but bequests that were realized and reported through IRS numbers. Now, the individual giving is more subject to certain economic conditions. We knew giving by individuals grew by 1.6% in current dollars, but with inflation adjustment, it actually went down 2.4%. Now, for individuals, perception matters as much as the reality when it comes to the economy. So even though personal income was up by 8.1%, the S&P 500 grew by 24.2%. Spending was up 6%. Remember that this came right off of a 29% drop in the S&P 500 the year before. Added to inflation, the costs going up. So even though these things are true, the feeling was that I'm not feeling as good as I did before. These economic factors really have not yet exceeded the 2021 levels in inflation-adjusted terms. So numbers have been going up, but economically, in inflation adjustment terms, 2021 was a better economic year, and that aligns well to it being a record-giving year. So it does reflect uneven economic conditions. Now, moving on from that, and I'm going to dig into a little bit of the conversation as we go. The giving by foundations did indeed cross that 100 billion mark for the second consecutive year. Now, I talked about some of this as how individuals are giving, but also a big part of that is the market growth. Market growth is pretty leading indicator for foundation giving historically. We've seen that, and it reached the second highest level on record when adjusted for inflation. But you can see, even though 2021 was a higher economic year in terms of individuals, from a market perspective, it's in a good place for the foundation dollar. Giving by foundations, this is the second highest level on record when adjusted for inflation, with the top foundation giving year being 2022. Something to note on that. And bequests are likely reflecting demographic shifts. Now, this is something that's very difficult to prove, but we do know that affluent individuals are more concentrated among older Americans, even at a more disproportionate amount than we've seen in other times in U.S. history. So a lot of the wealth is concentrated at older individuals, where bequests are more likely to be realized. And so the demographic economic factors indicate that bequests will continue to be an important area of giving going forward. The U.S. Census Bureau estimates there are over 77 million Americans aged 60 or older. and the wealth of older adults grew 30% just from 2019 to 2023. We've seen massive climbs in wealth among older individuals in the United States. And that's according to the Survey of Consumer Finances. This data suggests that the bequest number will continue to rise. Again, this number reflects after those bequests have been realized. Something to watch for and to be thinking about within your charities on your bequest programs. Now, the strong macroeconomic environment also helped boost giving by corporations and current dollars. Now, this is one we've been tracking over time, and by far, corporate giving is the fastest growing area over time. The 5-year annualized average has actually been 14.3%. That's more than double the rate of total giving over that same time frame. So in the last 5 years, giving went up 5.3%, the overall trend. Corporate giving went up 14.3%. Now, at the same time, the trend in terms of giving as a percent of corporate tax went down a little bit. I'm going to talk about that a little bit more coming up. But you can see giving by corporations and inflation-adjusted dollars, and then the GDP and corporate pre-tax profits. So we'll talk about that in a little bit. But corporate giving has been growing. Now, when we talk about who is on the receiving end of giving, this has actually started to shift. It's been very stable for many years, and we've started to see a shift in a couple of years. The one shift that is not new is that religion, I mean, even before 83, I mentioned we started tracking this in the 50s and 60s. Religion was pushing 3/4 of giving in the United States and is roughly 1/4 of giving in the United States now. Using that same 83 to 2023, 1983 to 2023 comparison, you can see religion at that point was 63% versus 24% today. Now, the influence of religious people remains pretty high in the charitable giving. Some of that, the sources from the Lake Institute on Faith and Giving, where it was pointed out in a recent study by them that active participants in religion, meaning people that attend or participate in their mosque, synagogue, temple, church, what have you, 4+ times per month, tend to outgive non-religious people considerably across all segments. Additionally, a lot of the charities have kind of fractured within religious community, meaning international relief or human services organizations that used to be part of churches or denominations or faith traditions have become separately incorporated organizations. So whereby a person might have given all their money to a religious organization, and that was their giving to international relief and human services. Many of those organizations, they give directly to faith-based international relief, which would be counted in the international relief or international affairs segment, giving directly to a religious health organization or to a religious human services organization. So where that data falls in terms of the classification is a little bit different. The other thing that should jump out to you is education and human services. Education, and I have these purposefully out of order because it's reflecting the 2023 order. Education has been the number 2 to religion for as many years as we've tracked it up until last year, where human services passed up education. Now, this might be post-pandemic, the reasons why human services and immediate needs have grown. And it's a bright spot because when people consider everyday donors versus affluent philanthropists, many people point out that affluent philanthropists are very interested in big change, solving problems, ripple effect, systemic solutions, and are often less interested in immediate needs. And human services represents one of the immediate needs. Someone might need to eat now and just need food, is more likely to be funded by the base of support the everyday donor. But this speaks well that human services have been climbing. Now, if we moved out the decimal point, it's pretty close. It's almost a rounding error difference, but it's notable that climb in human services. And certainly we've seen other movement, but that's one that is worth pointing out. Now, education still was the largest growing segment, but as a percent of group, it didn't pass where human services had pulled ahead last year. So when we look at the giving segments that grew the most in 2023, it's the segments that are the most often associated with wealthy donors. Now, those segments are education, giving to grant-making foundations, public society benefit, and then arts, culture, and humanities. Now, education might be pointed out as a very broad category. It includes educational organizations, secondary schools, post-secondary schools, universities, but also some of the great academic medical centers that you might think of as hospitals are part of education on account of their academic medicine classification. We know that the high net worth donors really favor research and healthcare at a high level and large education. And we've traditionally seen big growth when the wealthier and the older are climbing, education often climbs with them. Now, gifts to grant-making foundations is reflecting the wealthy donors' interest in structuring and organizing their philanthropy. Now, the same might be said for public society benefit. While public society benefits are also a broad category, it includes great organizations such as the Jewish Federations, United Way, and pass-through types of organizations. It also includes the National Donor Advised Fund sponsoring organizations. Now, certainly donor advised funds can be in all these segments because any nonprofit can host a donor advised fund. We mostly see them in foundations and in public society benefit. The community foundations are in the grant-making foundations category. The nationally sponsored donor advised fund organizations like your Fidelity, your Schwab, your Vanguard, et cetera, are in the public society benefit category. So there's some aspect of DAF giving that would be in the what we like to call PSB, or public society benefit. Now, the fourth area is arts, culture, and humanities, which does tend to be older and affluent donors as well. All four of these, including the arts, culture, and humanities, in both inflation-adjusted and current dollars, exceeded 10% in growth in a single year. So that was a big step forward. I've had many conversations with people about the arts, and personally, I'm a big advocate of the arts and supporter myself. But one thing that I really noticed was during the pandemic, I was of the theory that giving reflected Maslow's hierarchy of needs. When times were tough, we gave more to immediate needs like food, shelter, security, things like that. And when times are great, we give towards self-actualization, research, innovation, the arts, which I viewed as self-actualization. However, during the pandemic, I think we recategorized the arts. We didn't realize how valuable meeting together and thinking about what it is to be human and considering the human condition until that was taken away by the disruption, that now that that is back, we realize that the arts are really an essential need, and we've seen that growth charitably. In fact, in 2021, that record year, it wasn't just 10% growth, it was pushing 30% growth in the arts at that time period. So arts giving is climbing nationally, which is a wonderful thing to see. Now, the other is, if we look at all the areas, everything went up in current dollars, which begs the question, but didn't you say giving went down in inflation and was just slightly up in current dollars? There are two different research mechanisms that research the source of giving in the United States and the recipients of giving in the United States. And there's some unallocated difference between those. The unallocated can be the nature of timing. Someone made a commitment in one year, but it was gifted, but it was received on the other year, and how that showed up on the IRS. There is some going over across calendar years. There's also some aspect of we're reporting on giving from United States donors to United States charities. It's not capturing gifts outside the US to United States charities, which could boost the numbers up. So there's always some slight difference, but directionally it has really moved quite closely together. All the sectors except religion remained above the 2019 levels, which is the pre-pandemic level. Religion has not climbed above the 2019 levels. But here you can kind of see growth really across the board. And here's where you really see how education and foundations, public society benefit, and the arts, when compared to the others, how steep that growth really was. So all the sectors really having some health, really, and in current dollars, growth across the board. Okay, so from a context, those are the numbers themselves. And there's so many numbers, and I realize you're sitting listening to a webinar, there's only so many numbers the royal ear can hear, I guess, to quote Amadeus. Amazing movie, a little bit dated, probably when the 83 counts were coming together. But what were some of the trends that were happening? And those that heard me speak before, I really tried to evolve and think about what some of these industry trends are that really had some impact on what the true story is. Now, again, as I'm sure you all had taken that moment as I was going through the numbers to go to givenusa.org and subscribe so that you can see all the data and the back data tables and so forth. But I really encourage you, it's usually about a month later in July, we see the full written report, which is a true almanac of giving. Many people say if you can only read one thing in philanthropy every year, read that book. As chair of the board, I second that. But the Giving USA book, it has such great topics that are covered, from giving outside of the registered charity segment, which is what this really captures, to the stories of what's happening at large, at small, in communities, even really unpacking questions around donor advised funds and different ways of counting. I really encourage diving into that data and using that as sort of an almanac and learning from that. And I point out each of the chapters. There's a chapter on healthcare, there's a chapter on education giving, chapter on the arts and culture. There's an editorial review board of experts in healthcare, fundraisers, people like many of you on the call, and maybe many of you on the call are members of that, contributing to the content and telling those stories. Carol Wagner at BWF is a member of the healthcare editorial review board. I'm really proud of her contribution to the Giving USA research. So in the industry trends, when we talk about what was covered in the press, and this isn't just the trade press like the Chronicle of Philanthropy, Nonprofit Times, and so forth, but really in the national news, it was really captured on what is happening with this decline in donor counts. We certainly see that data most clearly from AFP's Fundraising Effectiveness Project, who we have great partnership with. They report on these declines in donors counts. And the total dollars continue to grow apart from the flattening effects of inflation in 22. We saw it grow in 23, apart from inflation. The average gift size is increasing and the sophistication of gifts is increasing, but we've seen that people participating in philanthropy continue to drop. Never was this more clear in one day than on Giving Tuesday in 2023. Maybe many of you remember the reports on that 2023 was flat. There was $3.1 billion given to Giving Tuesday in 2023, which was about the same number in 2022. But the biggest difference is 10% fewer people gave in 2023 than 2022 at Giving Tuesday. We've seen DAFs from private foundations, which we've already seen the trend outpacing them by half, becoming more popular. However, participation has been down. So many of us are asking those questions. How do we turn the tide on donor counts? Now, part of this decline in individual giving also sparked different conversations around, should we broaden the definitions to include giving outside of registered charities? So we've maintained a longitudinal research study going back 70 years on giving in the United States, but are we really capturing generosity in the United States and all forms of benevolence? I would say that we are in the written and the qualitative, but all of us should be thinking together, and certainly we are at Giving USA trying to find ways to really capture the benevolence in other ways, like the GoFundMe, giving directly to individuals, even generous actions of volunteering and pro-social behavior that we see. And as part of this, Giving USA and the Giving Institute stood up the Generosity Commission, which we will see a big report in September of this year, which I really pay attention to. It'll be launched on Capitol Hill on September 17th, really talking about several research studies contributing to the national conversation of how do we spark and ignite participation in charity in the United States. There was questions also in 2023 of big debates on, should we promote more pluralistic view to grow philanthropic culture, or should we not? That was a big, if you recall the editorials, especially in the Chronicle of Philanthropy in summer of 2023, it was sort of a heated topic. And many people asking, has philanthropy become just for the rich? Like, are we going to accept that? Are we not? That's what the conversation has been. But corporate giving sparked some of the same conversation. Again, giving, as I mentioned previously, has been going up, actually higher, 5% versus 14% growth in corporate giving the last 5 years. And meanwhile, the giving as a percent of profits has been at 40-year lows in the last 5 years. But at the same time, corporations are broadening what it means to be benevolent, what it means to be generous, what it means to be good citizens. So it's a complex and nuanced discussion. Because if they do social impact investing or activities and initiatives, commitments to environment and sustainability, even DEI and justice movements, volunteer time off policies, those areas in their mind are giving back to society in a way similar to in the past, it was all through charitable giving. But they do continue to give to registered charities, and that amount is growing. So people are asking, what does it mean to be benevolent? What does it mean to be generous? And is giving to the charitable sector the only way to be that way? And certainly we know generosity is really a value that is broader than giving to charity. But giving to charity is a good marker of the level of philanthropy in the United States. So we find it incredibly relevant to continue measuring. So here's that chart. In fact, we were seeing 2 and 3% before this chart starts. So this is starting in that 83 to be consistent, but you can see we're dipping below 1% in the period following the Great Recession, all the way to inching up over 1% a couple times, but the broader trend line coming down from being well north of 2% in advance of where this chart begins. So corporate giving as a percent of the money that they're making has not been as high, but it has been growing the last 5 years, and this trend line is something that we're really happy to see. So another question that's come up a lot this year as we've considered U.S. philanthropy is the questions of crisis giving. Now, we've seen this in, I guess, micro crisis, for lack of a better word, or very specific situations over the years, maybe where people give to the Salvation Army, they give to the Red Cross or Samaritan's Purse in response to, say, flooding in a region and so forth. But we've had some pretty cross-sector crisis moments, 4 big ones in the last 5 years, from the pandemic response, George Floyd in 2020, Ukraine in 22, and Israel-Gaza in 23, which, as we pointed out, Ukraine, Israel, Gaza pulled us out and focused broadly. Pandemic, in some ways, George Floyd helped us focus locally and in our communities in new ways. And there's been a lot of questions. I love this quote from the Dorothy Johnson Center, great research center in Michigan. Will philanthropy stay focused on racial equity? There have always been fads in philanthropy, and there are questions about whether philanthropic trends represent real or temporary change. There's currently an emphasis on racial equity in philanthropy, but does this represent meaningful change? It might be too soon to tell, but there's evidence that this shift may endure. As we gathered and looked at many experts and through conversations, those through Given USA and in a periphery and adjacent to that, what we've seen is many of the giving preferences tend to revert back after crisis moments to where giving preferences by individuals, organizations, and corporations were before those crisis moments. They step up in response to crisis and pull back. And for the most part, we're seeing that again, where it's reverting back to the previous philanthropic priorities by individuals. However, where we've seen resilience is in the area of racial equity, most notably in the foundation community, where there's been a continued focus on racial equity as a top giving priority. So there is changes happening. This might be one of the first crisis response that is sticking around a little bit, which is certainly wonderful. We'll continue to monitor that and see that. Will crisis giving endure? But one of the stories, and I mentioned this when I talked about the global philanthropic mix, is that trust in nonprofits has been really challenged. Globally, we've seen that going down, especially in Europe and in North America, where trust in nonprofits is at lows. In the U.S., it's certainly going down. Edelman is the main source of trust in the nonprofit sector. They've been the one reporting on it. And in 2023, 52% Americans, just over half, said that they trust nonprofits. Now, this went down from 56% the year before and continues a downward slide of trust in nonprofits. Now, it's not the worst one. It's actually fourth from the worst. The ones being worse would be the government, news media, and big business. So it's a 4% decline. So it's still exceeding in terms of those 3 categories that are in a worse spot. When Edelman's study, which I do encourage looking up and reading the Edelman Report 2023, you should be able to Google Edelman Trust in Nonprofits. They really dug into political polarization, its effect. And from their studies, it affected civic, civil rights, and religious organizations the most, but they were not seeing a polarization effect on certain areas like wildlife conservation, health, human services, and youth development, which seem to be resilient to political polarization. And 70% of people, even though they said overall they don't trust nonprofits, 70% said they were more likely to trust an organization that's in their local community. I guess to like is to know, and we see that in terms of trust. But now this is asking all Americans if you trust or don't trust nonprofits. When we looked at donors specifically, it's actually a slightly better story. Giving USA, one of our special reports that you would get through your subscription, is a giving by generations. This came out in early 2023. And while we didn't ask the exact phrase of trust, very closely we asked percentage of donors who believe charities are doing a good or excellent job. Now, again, this was sponsored research conducted by Dunham & Company and Campbell Rinker, to give them credit for doing the work. Giving USA was a presenter of this research. When we looked at believing charities are doing a good job from 2016 to 22, which was the last year of measurement, we actually saw trust increase from millennial donors. Again, this is not all millennials. This is millennials who give to charity had gone up. And the boomer generation, it went up. Gen X remained flat, and there wasn't a measurement on Gen Z before. But the overall belief that charities are doing a good job went up among the donor community. And financially, both the millennials were the only one that as a group giving increase, and it went up considerably from 2016 to 22, or 40% increase. We've actually seen slight declines in both the Gen X and boomers. Some have noticed Gen X are moving into peak giving years and their numbers are declining. There's some generational concerns on that. Again, these are averages, and it doesn't look specifically at the high net worth or the everyday, but it's a cross section. But flat to slightly up for the donor community. And where we saw by segment is, and this is now turning to Gallup, is that higher education has had the most difficult time when it has come to trust, based on many things happening in higher education, from high costs, some of the stories we've heard from positions held by institutions, constituents, students, and reactions around current events, public feelings about race-based affirmative action ruling, and others. There's been this continual decline in trust in higher education. And you can see this from 2015 to 23, where 28% of the American public have high trust in higher ed, down to 17. Overall numbers you can see declining across the board, with the some to very little being where it's climbing. Now that said, you'd be like, but I thought you just said education went up in double digits. It did. Where we see is a higher net worth are continuing to give to higher education, and we're seeing less of the base of support and the everyday donor in terms of their relationship with higher ed. Something for us in that sector specifically to pay attention to. Knowing that with my BWF hat, many of our clients are in the higher education sector, I wanted to give a little attention to that. The other thing I would say around that confidence is when we look by generations at their top priorities. Now, consistent with Giving USA, religion is the top destination of giving in the United States. But what we've seen is that education, as I pointed out over time, was in number 2. That has maintains the number 2 spot among boomers, but has fallen lower on the list for the next 3 younger generations and farther as we go up. So the Gen X donors, we've started to see health climb. Millennial, we've seen health climb as well. Gen Z, we're seeing health and environmental move into the 3 spots. So the growth, even if we look at the 4 and 5 spot, we're seeing education and healthcare on the climb among younger generations. Education and religion on a decline, but religion still maintaining that pole position in terms of giving across the United States. Now, the other big topics in 2023, certainly we all notice AI conversations happening everywhere, largely with ChatGPT making AI very accessible to all of us. AI is certainly nothing new, but our ability to interact with it in a very non-friction way is relatively new. Similar to donor advised funds have been around for over 100 years actually, but they really became popular when the National Donor Advised Fund sponsor organizations found a way to make it easier to give by a donor advised fund than to give otherwise. It was the friction relief that really helped that take off. Similarly, AI, the friction of having to be a data scientist to do it kind of moved away with the rise of ChatGPT, which caused the dialogue on, is this great? Could it wipe out humanity? Is it good for jobs? Is it bad for jobs? We're understaffed in philanthropy. Will this help close the gap to get more return on the staff we have? And where we've seen is really across the board that there's a great amount of applications that we're seeing, from generative content and marketing automation to provide personalized experiences more broadly to the base of support, to understand constituent perception and how we, from imputating how people might feel about us, and are we shifting in terms of sentiment around giving? Certainly many products and developments within nonprofits around identifying leads for giving, business simulations around campaigns. If we add more staff or reallocate them, how much more will we raise? Real donor journey mapping and orchestration to task wizards, action recommendation. We're seeing applications climb. And really, I like to remind people that this marketplace is very responsive to what the market needs. So if there's ideas for AI that you have, talk to the vendors, say, this is what we're really looking for, to give an idea. You don't know how much control you all have on what is developed for the sector as a practitioner. So lots of areas where we're seeing fundraising applications, but also many questions of data privacy in closed and open system, how imperfect or are inputs dated? Are we overconfident and over leveraging it? Questions certainly in the academic community, its impact on learning and how that's changing. Biases. Many data science and classification algorithms by their nature are lookalike models, which are without controls and sampling can very easily move into unintended biases. And also inauthenticity in relationships. One thing we know about younger generations, especially, they have a strong radar for inauthenticity. And it's very easy for AI to be inauthentic. So that's a lot of the dialogue that's happening. So we're talking about the global perspective going into giving. What happened in 2023 in giving, again, hitting $557 billion despite inflation and all of these headwinds, but really seeing giving how resilient it is in the face of inflation and economic uncertainty. And then talking about the trends and the stories that were also happening. So what are some of the predictions? I believe 2024 will be the year of the everyday donor. We've talked about a lot in 2023, but I'm really pointing to the Generosity Commission report that I should say expected in 2024, which is accurate, has now since pushed to September 17th, 2024. So I can give you that date, September 17th, 2024, the Generosity Commission report launches. After this decline, some of the questions, companies like ours, as well as organizations, I mean, it was thought for a while, if only the wealthy are giving, let's just cater our program to the wealthy. But what that's done is probably stretch out the issue, and we're robbing from the future in many ways. And it requires organizations that, like BWF, to make investments in the everyday donor, which we certainly are. In fact, we're doubling down on that because we believe that every person deserves to experience the joy of philanthropy. And we've seen ways through integrated tool sets, through digital fundraising, participating in the attention economy, authentic video, scaling donor experiences, building community among our donors who really desperately want to be in community with other donors, along with research that we believe that we can turn this tide. So hopefully working together, we're all going to invest in the base of support and not just give up on it, because I believe those donors are your major donors of the future. We're also seeing a tightening already in AI applications around lead generation, and the pipeline is where we're seeing the most energy and investment, but also in risk alleviation around, say, funds management and due diligence in other areas, and then mass personalization in terms of communication with a broad base of support. When I compare it to the major gift pipeline, I know this is kind of a detailed chart, and one that, I like to put up a lot, because when I measure the whole pipeline, I think about how much money we yield against the potential in our whole database. So a yield against capacity, let's say this is the top of this chart is many billions of dollars, but we raised 100 million last year. Large organization and so forth. And let's say that that's 5% of the 2 billion in capacity. What happened to that other 95%? And the pipeline is helping us focus on where those gifts come from our lead identification, which might be research, screening or predictive models, machine learning models is where we're seeing some investment. Verification by prospect researchers, seeing growth in AI-driven verification algorithms to help bring efficiency to that. To assignment protocols, where we're starting to see nudge and prompt kind of solutions and persona warming. So meaning, hey, you should maybe talk to this person. Let me get you started with the email. Seeing that through cultivation, including some generative language on those emails. We're seeing asset and capacity modeling to get the right ask amounts, to boldly ask, continuing to nudge through the process. And then an emphasis on donor experience content, just like what we saw, mass personalization for getting someone to give, asking the questions, what does it mean to be a donor and how could that experience be better? Really almost like hospitality perspective. And then also, I think one of the new buzzwords that we're starting to hear, at least I'm hearing quite often, trying to keep my finger on the pulse of the sector I care so deeply about, is fundraising ecosystems. Moving from to raise more money, we just simply need to add more staffing, but to ask smarter questions about how do we allocate our staffing to maximize the performance, or do we have the right people in the right roles to do their best? Moving from metrics as a solution to lower performance to why should I want to perform? Metrics not by itself, but metrics with motivation. What are the reasons why, especially coming off of a period of quiet quitting and I'd say in some ways exhaustion from the pandemic, what is ways to really motivate employees? Moving from the front line, which is a very major gift officer focus, to, bump the key as I was using hand gestures, to how does this whole program raise money? What's the program-wide return on investment? Thinking about data, oftentimes people think of data like, oh, that's something for the operations folks or the data scientists to worry about. Really to thinking about in any business decision we make, do we have basis for it? Thinking more broadly, it's not just data, it's basis. When we're going to make a choice, is there basis to that? Or is it just 5% more of last year? And moving from silos to really holistic donor journeys and experiences that we help orchestrate for the donors. So at high level, what do I predict? I predict that giving will continue to grow. I'm expecting 2024, based on market conditions, to be very strong. Certainly 2022 was going very strong until market went down in the fourth quarter, pulling the numbers down. Maintaining some of the market optimism, unemployment, inflation rates, moderation, and GDP, the markers are for future growth in 2024. But we're also, even though my dearest hope is we see a resurgence in this market and focus on the everyday donor, I'm not sure it will quite turn the tide. It's probably not going to be too soon that we do that. So with that, I know I left just a couple minutes, and I mentioned that I wouldn't have much time for questions, but we will share the deck. I do see there's a lot of questions about foundations and donor advised funds and the giving by foundations. I think I'll reiterate, donor advised funds could be in any of the segments where they're hosted. A large portion of the donor advised funds are probably in community foundations and nationally donor advised fund sponsor organizations. So that's predominantly in the foundation segment and the public society benefit segment. And the giving by foundations does include private family foundations and community foundations. So that's hence the estimate, about 84% of giving is probably coming from individual decisions, even if it's manifesting through grant makers. And seeing some of the changes in corporate giving, a few have asked about that. Seeing interest in volunteer times, many people validating the findings there, that they're seeing that there. Thank you for sharing that. I really appreciate it. And the religion category, again, focusing and clarifying, yes, it is giving to the denominations and the charities, not faith-based nonprofits that would be represented in other segment. So a faith-based hospital or a faith-based food shelf would be in human services or in healthcare. In reverse, respectively, I guess. And I think probably with that, I'm going to run out of time. But what I'm going to say is I'm going to review these Q&A, and it means so much to me that you'd ask me a question, that you would attend, that you'd participate. it means so much to me also that you serve this sector. I know myself and the whole BWF team, we care so deeply about the nonprofit sector. We know they've made promises to the donors, they've made promises to the people that they serve, and it's our dearest intent that we can help them meet their promises by accelerating their philanthropy, being supported, and accelerate this culture. And when we see giving going up in the United States, it's personal for us. This is what we believe in. We know it's what you believe in. And I want to thank you. It's such a noble profession. It's truly doing good in the world. Everyone says that they would like to change the world. I can tell you all, those of you on the call, you're in the business of changing the world. So with that, I thank you. Go out, raise bold money, remember the everyday donor, embrace the community among your donors, and I look forward to talking to you again next year when we roll this out, and I'm hoping for many of you sooner than that. I love you all. Be well.